All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx, coming to you live from the trading room of drstoxx.com. That's drstoxx.com. And if you're interested in joining us trading with an amazing community of traders, you go over to drstoxx.com, click the subscribe menu, and hit this live trading room link right here, and you'll be good to go. If you're interested in market advisories that give you what I'm looking in the market: entry price, stop price, target price, reasons for the trade, go to the subscribe button and click on the first link. And if you're interested in learning how to trade, go to this third menu and you'll be good to go. God bless everybody. Let's get down to business. So here's the first thing I'm going to do. I'm going over to Twitter. This is the Dr. Stoxx account on Twitter. And if you're not following me already, you're missing out because I post a lot of charts on here and a lot of fun stuff that doesn't go anywhere else. So here's what I did just a few hours ago. I went and bookmarked a handful of threads on Twitter that I thought would be interesting to share with the live room. So we go to bookmarks, and I want to show you, first of all, this chart comparison right here. So let me see if I can rewind this. All right, so this is a chart comparison between Apple and NVIDIA. NVIDIA, as of today, is now the largest company on the planet. It just surpassed Apple. It did that a few weeks ago, kind of fell back a bit. Apple went up, NVIDIA went down, and it was reversed, but now they're back on track, and NVIDIA is now the number one. So here's what we want to look at. How do we find the next NVIDIA? Right, NVIDIA is still a great trade. I have it in my long-term account. We're swing trading NVDL, which is the leveraged version of the of NVIDIA shares. So I like it a lot. It's got a big presentation tonight. I have a feeling that it's probably going to be maybe a little bit of a sell on the news event, but man, there's still a lot of upside for NVIDIA. And if there's anything the market isn't aware of already, that should give a nice pop to the shares for tomorrow. Tomorrow is probably the best day to get out. We'll see. We'll see. Anyway, let's watch this chart, and you're going to see some amazing movement in the relative price from Apple to NVIDIA. Keep in mind that Apple had its debut of the MacBook Pro, the iPod, the iPad, all in the early 2000s, and that was really the spur. This new product line to coming on board. Very popular, of course, and their design was amazing, and everybody had to have them. But that's what spurred the amazing growth we've seen in Apple. New product lines that were very successful. Now watch this. So Nvidia is kind of floundering, right? Down there's the big pop on all those new products. Look at Nvidia, way down there. Apple is still going higher, 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 higher. Okay, now look, Nvidia's coming online. Oh, boom. Big Nvidia push on new products related to artificial intelligence. They used to be a one trick pony, right? They had the best graphics card in the business, and once gaming came online, that was a big spur. And then all the streaming data that had to be crunched, NVIDIA was on top of all of that. So they really did very well once they started going. When they hit the sweet spot of AI, right around 2019, 2020, boom, all the way up there, surpassing Apple. So here's the takeaway from this. Look for strong companies that are coming out with new product lines. You're going to see a new product line in Tesla, right, with the self-driving software technology, and maybe some energy plays. Not sure exactly what Musk has up his sleeve. Um, AMD has not had a good new product line. Intel definitely has not had a good new product line, and those are companies that are floundering. If AMD can come out tomorrow, I think they're making their presentation and tell us about some new things that they're doing in the market, it might have, in fact, a really nice pop. That's the key. New product line that is, and maybe even moving into a new space, right? Like you're a software company that does customer uh, customer management, and then you move into cybersecurity, right, with a whole new product line. That's the kind of thing that can really give a good spurt to the stock price. So pay attention to that. You can find that information all over Twitter. Just if you follow some good news outlets, you'll find out some business news outlets. You'll find out about those things as soon as they happen. And that's the key, right? New product line, successful, into especially into a new sector, a new space of the economy. All good stuff. Now let's look at something else. So here is a thread from Kobesi letter, the Kobesi letter, and I do have to say that they're a good follow, but they are much more bearish than I think they need to be. They're always talking about overvaluation, high PE ratios, high book to value, price book ratios, but there is a couple of threads in here that were interesting. So they're making comment. The S&P 500 is up now to near all-time highs, not quite there yet, I don't think. And they're also saying that the price to book ratio is extended, overextended, way higher than it was way back in March 2000, and highest ever levels. Well, price to book, of course, is a measurement of the company's financial strength, kind of bottom line strength. High price to book ratios tend to lead to bankruptcies. Low price to book ratios lead to long-term endurance. So are we saying we've got a whole bunch of bankruptcies coming out there? Well, maybe, maybe. But keep in mind that, the market is shifting. The market is moving away from manufacturing and more toward very rarefied forms of technology, moving out of construction and infrastructure and moving into services. And those are the kinds of companies that just tend to have higher price to book ratios. So it makes some sense that we're seeing these historically high ratios. It's not necessarily a bearish thing. So keep that in mind. Forward PE ratios, not worried about those either. That's not, I guess that was really about all I wanted to say there on that. But there was one other thing I wanted to show you. This one right here. This is it. So this is a chart that is only referring to the last quarter, quarter four of 2024. And if you look at all these markets, right, and most of these, in fact, nearly all of these, I think, are developed markets, right? Maybe a few developing markets like Mexico are in there, Brazil is in there. But you've got all the European countries, you've got some of the BRIC countries in there, you've got the EU, you've got a marker for the whole world economy. Everything last quarter was red. Red, 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 red. And look at these guys down at the bottom, right? Denmark, South Korea, Netherlands, Sweden, Australia, Switzerland, Spain, EU down 10%, over 10% last quarter. It was a horrible quarter for the European countries. And Germany is on the brink, absolutely on the brink of major recession. And I'm not so sure that's true for France and England, but it could be. Oh yeah, there's a world of hurt out there across a broad spectrum of developed nations, some of the BRIC countries as well. And who is the strong market? Who's the one leader in the whole group? Who's the one major market that made a profit last year, that actually expanded GDP, expanded market cap? The United States. So that's what I was saying before. We are the only game in town. And that is a massive tailwind for all those money managers from all these different countries that are looking to make alpha. They can't make them in their market. Where are they going to come? Our market. So look for heavy, heavy inflows. We've been seeing them all year, right? All 2024, big, big inflows, sometimes record flows. And that's a big part of it. The rest of the world is caught the flu, and we're out here running, maybe not running a sprint. 2.5% is nothing to sneeze at in one quarter, but it's still not great. But we're doing really well. All right. That's all I wanted to say about that. Let's go over to some charts. Just want to do this quickly because I do want to get back to the market and make sure that we are well positioned. I'm sorry. One last thing I want to do before I forget. Hopefully, I'm going to go over to finviz.com. And I have to tell you that I've been seeing these really nasty ads pop up with some scantily clad girls uh, for Temu. And hopefully, I'm going to go to Finviz because we need to see something here. Actually, you know what? I don't. I don't need to go there. Let's not do that. Let's. I know where else we can go. Let's go to. Let's go back to Twitter. I'm going to type in economic calendar. There it is, and click on the Market Watch. And this does the same thing. I was just going to go to Finviz to look at the upcoming releases for economic data. We've got a whole bunch of them this week. We also have a day off on Thursday, right? President Carter's funeral. So markets are completely closed all day. And but before then, tomorrow we're going to get ISM services. Now we had the ISM manufacturing, not as important because that's a very small part of the overall economy here in the United States. But it was, if I recall correctly, it was lower than expected. The ISM services, this is the big part of the economy, and it's the growing part of the economy. And anything over 50% is a growth phase. Anything under 50% is a contraction. So we had 52.1 last month. We're looking for 53.4 this month for the month of December. And if we get anywhere near that in line, I think we'll have a good bullish boost to the market. If it comes in at like 51 or something, or 49, even horribly low, we will probably see the market sell off quite a bit. So that will move the tape. And then right at 10 o'clock, we get the jolts. It's our first read on the jobs data. It's not a big deal. It is just how many new jobs are being advertised, not actual new jobs created, but how many are being advertised. And we're looking for a number of 7.7 million. If it's way out of line, that will move the tape a bit, but I don't think it will be. Then we get the ADP report, which is like a precursor to a little bit of a preview to the NFPs, the non-farm payrolls, which we'll get on Friday. And we also get the FOMC minutes at 2 o'clock on Wednesday. Then we have the day off, and then everything comes down on Friday. Consumer sentiment at 10 o'clock. But before that, we get how many new jobs are created. Look, the market's looking to go downhill. 227 last month. Now, that was a big number because the previous month on weather-related issues was really low. So that was a bounce back. We kind of expected that to happen. 155. If we come in at like 130, I think the market will sell off. If we come in at 180, I think the market will also sell off because it's a little too hot. Too much inflation, not enough liquidity coming from the Fed. I suspect we'll get something pretty much in line. Not that the experts are ever right. They're almost always wrong, but something around 150, 145, 150 is probably where we'll land. I do think we'll probably get a tick up in the unemployment rate, 4.2% to 4.3. Don't think that's going to make much difference to the tape. And really, that's about it. All right. Then the week after that, we get the PPI, CPI, and all the inflationary stuff. So that's the bigger thing that the market's going to be worried on and focused on. Back to charts. S&P. This is the futures contract of the S&P. It is forming a very bullish. We'll call this a falling wedge, or it's not exactly a bull flag. I'm not that concerned about naming it correctly. I'm more concerned about seeing price move out of it. It did get up there early, right? We've been in a downtrend since noon, and it was right at noon where we hit that high on a potential breakout, and we just weren't ready for prime time. We pulled back in. I think tomorrow is probably going to be some tight, choppy, range-bound action within this little frame right here. Another day of inside trading action. We get the day off. I'm sorry, no, we don't. We get Wednesday. Wednesday could be then the breakout day. A lot will depend on what's going on tonight and tomorrow night. The CES report in Las Vegas. We should get some bullish support from that. But if the market is not hearing what they want to hear, or if nothing new comes out of that, then it's probably not going to be the tailwind that people think it is. So here's the NASDAQ, same story, absolutely same story. Of course, the NASDAQ and the S&P are both driven by the big mag companies at the top, and most of those have been doing pretty well the last couple of days. You can see we pulled in 5 red bar days, 5 days lower. That's not very common. We hit the pink zone of an uptrending LRC. We hit the 50-period moving average. It reversed higher into the close on Thursday, and then Friday, boom, big reversal bar, heavy volume. Look at that volume on the NASDAQ. And then a follow through day today. So this is very good. A lot of folks are out. They were out this morning saying bullish, 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 that this pullback is done. I'm not so sure about that just yet. I do think that we'll be a little bit lower by the time we get out to the middle part of the quarter, if not the end of the quarter. But we'll worry about that. We don't trade that far out. We trade in terms of hours and a few days. And for a few days, I think we're going to be okay. The small cap index, we are long and needs to kind of hold current level because there is some resistance right there. It was a former pivot high. We've also got the 21-period moving average. We're trying to move up out of this rising LRC. We've got the double bottom. This is actually a nice looking bullish setup right here. Right? Nice rounded. We could call that a V bottom, and the rounded bottom, that's an Adam and Eve. If you understand the reference there, Adam and Eve, double bottom, and we're just trying to break out. Now, this doesn't have to break out today, doesn't even have to break out tomorrow, but I do think by the time we get out to Friday, we will see that 50-period moving average come into play. We went long gold on the dip somewhere down in this area, actually not too much lower than where it is now, but it rose, it spiked on the strange news coming out of the Washington Post that the Trump tariffs were not going to be as prevalent or as heavy as people thought. The dollar collapsed, gold spurted higher along with all the indexes, and then it came out about an hour later that it was a fake news event. Or I don't know exactly what it was, but it was just not true. Trump himself came out and said it's not true. So that caused the dollar to rally off the lows. Gold started to fall. Gold really fell to some pretty deep lows, and that, to me, that was the trigger to get long again. We were long before, we took a profit. Now we're going to get long again, and there are all kinds of good reasons to be bullish on gold. Number one is that the dollar is overvalued, the dollar is overbought, and China has been buying up gold like crazy from their central bank, trying to shore up the strength of their yuan and all the borrowing that they're doing to try to stimulate their economy and stay out of recession. So those three things on gold should give it a good bid going forward. It's not a very good pattern. I do have to say that the one thing I do like, if you go to the weekly chart, in terms of the pattern of this trade, it's not that great. But if you go to the weekly chart, you're going to see that on a near-term basis, you're getting a very nice looking symmetrical triangle forming here at the top of an uptrend. You can call that a symmetrical triangle, right? Like that. I like to call it an apex setup because we're moving closer and closer into the apex of that. And usually when you get to that apex, there's only one way it can go. It's going to go up, going to break out to the upside because it's the prevailing trend that will dominate the next move. But you can't go sideways for very long. We do have an inside week bar forming, but it's only the first day of the week, so we have to wait on that. But I like the weekly chart setup. The daily chart's a little bit, just a little bit squirrely, kind of iffy. All right, we are long Bitcoin. It is doing really, really well for us. So we bought down here on the dip, and we bought the Micro E-mini MBT futures contract for Bitcoin. We were also long already somewhere back in this area. In fact, way back here, we were long. We went long ARKB, which is Kathy Wood's exchange traded fund for Bitcoin, and we went long IBIT, which is another probably the best in terms of expense ratio, at least the best fund to use for Bitcoin. And those two have been doing really well for us. We just wanted to do a little swing trade with a futures contract, which are a good leveraged instrument to have some fun with this little breakout. So we got the breakout last week, right there. I think that's when we bought it, right? We bought it just as it was peaking out right above the 21 period moving average. It had followed through the next day and a big, nice, strong move today. We're also leveraging this with MSTR, which so far so good. It can be kind of a scary hold, but it's also doing a breakout. So, guys, this is like technical analysis 101. You see a pattern like this, does it always work out? No. Will it work out 65 to 70% of the time? Yes. Trade management, of course, is all important here, but you have this long pullback, right? Long pullback. This was I don't know what happened here. Big, that's not the election, so I don't know what it was. Big upside on MSTR. There was just a big gap and crap. So that bar is a little bit weird to work with. But if we just discount that, we've got this sort of ABC pullback. Here's your ABC pullback. ABC pullbacks in a longer term uptrend, and this does go way back to the October lows. Typically a very good place to get long. Pink zone of the LRC, also a good place to get long. Breakout of the pullback trend line, also a very good place to get long. A reclaiming of the 50 period moving average, which happened on Friday. A reclaiming of the 21, which happened today. All that is good. Bullish, 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 bullish. And then, of course, there are also some very good tailwinds for, see, it's still going up. Tailwinds for Bitcoin, especially if our where's my fingers? I put them right by my face. If overbought and overvalued dollar starts to crack, when that happens, you're going to see gold go up. You're going to see Bitcoin go up. You're going to see oil go up. You're going to see the euro go up. All kinds of good things can happen, and it's just not there yet. Let's see. I'm not even going to do the dollar because UUP, which is the ETF that follows the dollar, it's got this big drop in it. I'm not sure what happened there. Some sort of a distribution, and it has ruined the chart. And I don't know why they don't price that out, but they didn't. All right, so that's all we want to look at there for charts, and index charts. I mean, let's go over to my greens list. We'll do worst to best. Exxon, actually, I'm going to get rid of this one. I don't know why it dropped so hard today. This is from the IBD leaderboard, and it got kicked out of the leaderboard earlier today on that massive slide, and so we want to get rid of that one. ANF has been on my leaderboard for a little while. It was brought to my attention by someone in the room, and I really liked this pattern that it was forming here. It's an apex pattern, but it's very long, right? This is more of what I would call a bullish base pattern. It's at the end of a downtrend, bullish base for several months at a time, starting to see some accumulation near the top of that trend. And then it was a gap and crap today. So today is definitely not the day to get in. We did go long CRM. It got off to a great start. Don't know what happened here. Everything kind of reversed. Around noon, I don't know if there was any news out or if it's just the market is starting to discount some of the data points coming out. But it was unfortunately it has come. We're still above our stop, but it has come down below our entry today. Let's see. Netflix. No, let's look at a few that I'm interested in. So Facebook got a nice upgrade. Not an upgrade, but a price target upgrade from Jefferies. Jefferies is where's my finger? The number one investment firm, analyst firm. They have the greatest guys in house. They have very good research, and they're very conservative. So when Jefferies speaks, it's time to listen. And they raised their price target on Facebook over the next 12 months from 675 to 715, I think. 715. And that has given a nice bid under Facebook. It's in breakout mode. It actually broke out on Friday, follow through day today. And this looks good. Now, the problem is there's not really a whole lot of near-term upside for this. It's going to get probably stuck around 634, 635. I'd be surprised if it gets to 640 this week. But we'll see. The market is always full of surprises. We bought some AMD calls ahead of their conference tomorrow. They got off to a very good start. I think we're about to where we bought them now. Um, but this is good, right? This is not a very good looking chart. It's been in horrible downtrend, but the valuations here are very compelling, and the we're really just playing. It's an unofficial trade in the room, so if we do really well, I'm not going to count it as part of the performance, and that usually means it's a riskier trade with a little less confidence on my part. But I just wanted to get on board some cheap, out of the money, near term calls as a lotto, just in case AMD comes out and knocks it out of the park, which is definitely possible. Uh, ARM was one I looked at last week. It was this big green stick that kept me out of the trade because I don't like to buy big green sticks. And of course, this is like one of the very few times you get a big green stick and it just keeps going higher after that. It is in breakout mode right now. I like the company. It's my favorite IPO from last year, and we just have been kind of missing some of these entries. It gave us the best entry right here, this little 3-bar reversal in the pink zone of a flat LRC. That's usually a pretty good place. It's like a rolling stock, right? It goes up and down like a wave. And you buy the support, you sell up at resistance. It's not quite to resistance yet. Maybe 155 is the target, but it's a little too late to get on board this one. But I like it a lot. I'm going to keep a watch on it. So we got out of Stoxx. It was up around 33.33 or so when we got out. It's now below that, 32.67. I don't think it's a reload here for me. We've got AMD calls. We've got NVIDIA, NVDL on board as a swing. And we're also long TQQQ. So I think we've got our bases covered with all the. Are we long TQQQ? Or was it the. Hold on a minute. Yeah, we bought that today. It's not really a whole lot. Hubs was a addition to the IBD leaderboard last week, and I like what it's doing here. Nice soft pullback into the pink zone, push up higher Friday. It's not really that exciting just yet. Not really a whole lot of bullishness if you can compare this to the NASDAQ, right? Two big up days, and Hubs is just kind of lounging there. So maybe not the best trade, but it is worth watching if that gets back on track. They also like HIMS, kind of a similar setup, right? Pull back into the pink zone. Nice move on Friday. A gap and crap today, however. So that's a little bit of a concern. But I do think the market right now, right, we're still kind of moving lower as I speak. The market is just getting a little nervous, maybe nervous about tonight. I don't know. About NVIDIA? Are they thinking it's going to be a sell the news event? Possibly. NVIDIA is up near, well, in fact, it was earlier today at all-time highs. So that's possible. Possible that the market is just wanting to put some profits in the bank. Maybe we should be too. I'm not sure yet. So anyway, I need to get off the mic here so I can get a good feel for what the market is doing. You already know kind of where I'm going, some of the things I like, and the macro picture for the market. So let's just leave it at that. God bless everybody. Have a great rest of the afternoon. Sorry I couldn't do chart requests today. We'll do that tomorrow. We'll see you back in the main room in just a few minutes. Bye for now.